Hey guys, how's it going? This is Grisha from Technical Option Trader. Let's get started on what's been going on in the markets today, and let's see where we're gonna go and how we're gonna make some money, right? So looking at the S&P 500, amazing levels if you think about it, right? So this was a huge level that I talked about, 395. It held above that, and then what do we have? Because the CPI data was forecasted to become lower, that means market anticipation was already pricing in the CPI data report. But what was key today was the remarks by the Fed ministers, and they all stated that there could be potential rate hikes coming up in the following year, and those rate hikes could be anywhere from 25 basis points, maybe 50 basis point at the extreme, but nothing higher than that. Now, what I want to focus on is this: the distance between this pivot low and this pivot low, right? So this is a low level, right? So this is higher than this level. So this means the market has accepted this level as a high, higher than this. So that means there's a lot of support here. So this becomes an area of interest now, right? So if we look at this, what we want to pay attention to is this area. So when the market, if the market is going to break down or we're going to have a trade to the downside, it's going to be below 375 now, right? So this downtrend line has been extended this way now. All right, so that's the most important thing we got to realize, and we're getting a pennant shaped pattern that's been forming here now, and price action, as you can see, is getting tighter. So if we break above the 404 level, we can go to 410 and then all the way to 418. That still remains a key level to watch here for this market, right? And what we're starting to see as well is possibly there could be a gap fill, but we could have next couple of weeks of just, well, next a week or two at least of just consolidation. Next week is a short week. Monday is a holiday, and the markets are closed, so that's something that we got to keep in mind of. All right, so the S&P 500 does look like it's going to get ready to go. Nice consolidation here, and then a breakout. But what we want to see is we want to see the pressure of volume. The volume pressure has been pretty decent. It's been increasing as well. That's pretty good. But this candlestick is very weak. What I want to pay attention to, or what I'm expecting in the next couple of days, Friday and Tuesday will be consolidation or inside trading days in this range, and then we get a breakout to the upside. Unless there's some sort of catalyst that comes out of the news, like a war breaks out or something like that, which can push it lower. But this downtrend is pretty prevalent. But what we can see is price is trying to curl up and break out here. Looking at the triple Qs, we got a similar situation happening here. Price is starting to curl upwards, and we're trying to trend towards this level. What I want to realize and talk about is this level now. Okay, the 250 or 259 or 260 level. If we're going to take a down move, I would say it would be below this. And nothing in between here is just choppiness, and don't try to take a trade between there. You're most likely going to lose money. And now we're getting above this level. We want to break out and consolidate. A nice big upside move will be above this downtrend line to about 300 possibly from the break of this, which is 290 to 300, which is a 10-point move on the triple Qs. If we look on the smaller time frame, we can continue to see that this purple area that's been highlighted is still a prevalent zone here. A lot of selling pressure was here, so we have to see if the bulls are back in the game and if they're going to really push up here, right? There's nothing, no analysis or no indicator will tell you as much as price action will tell you. So price action is the volume and the percentage of the move followed by the volume. So we have rising volume here over the last couple of days. We may get a pullback or we may get a distribution for our next couple of days, and then finally a breakout above, right? That's something that we got to continue to watch for and see where it takes us. But so far, triple Q is just like the SPY, looking like they're ready to go. The other thing that we want to focus on is IWM. I talked about this. This bear flag was a fail, and so we'll just ignore that for now. And if IWM, we're going to focus on the downside trade. It's going to be through this level 170 to the upside. Is testing this bigger downtrend line, which is right about here. We want to see it get above, consolidate here for a couple of days, and then break out to the upside above 190 to 201. Okay, so this will be a nice move up here, and it's starting to look like it's going to push higher, right? So small caps we got to pay attention to. Usually when market is going to bottom out and start pushing, usually small caps do tend to lead the market. That's something that I will be watching for in the coming weeks, is if this is an actual turn in the market, or is this just a squeeze, right, that we're getting here. But the good indication is all the yields right here have fallen. and also VIX has fallen as well. Let's talk about VIX. VIX, huge breakdown. I've been talking about the saucer pattern. Look at this complete breakdown of the VIX all the way down to 18. Now, my level's right here, 14 and below, right? I want to see VIX get right below that. We're getting low levels here of VIX, so this is giving me some confidence that, volatility is being taken out, fear is being taken out, that we're getting to a price point where it may be more accepted in the market. That is something that we want to pay attention to. Looking at the Dow here, I did mention this, this could be a possible inverted head and shoulder pattern that we're witnessing, and a breakout above this could be really, really strong for the market as well. That's something that we want to continue to watch for, and sometimes these patterns emerge, and when they do emerge, so what we want to see here, we want to break out, pull back, and then continue to break out to the upside. Dow is leading the market right now because the economy is still strong, the labor market is strong. So if we look at a 2-hour time frame, we get in here, we want to break out of the 345 level all the way up to 354. But what is interesting to note here, even though around this level we got rising volume, which is great. We want to see the pullback that's going to come up now in the next couple of days, how far that pullback goes, how steep it is, and where we start going next. It is very possible that the market could go sideways for a couple of weeks before it decides to break out, because we do have earnings starting Friday, starting to populate. So earnings will be a really big catalyst to give us a direction in the market. All right, guys, the other thing I want to talk about is gold. Gold has been breaking out. It's above my zone here, so this is a gold position that I was talking about. When it breaks 175, you should enter gold. Put a stop loss at 173. Once again, do it at your own risk. I'm not giving any kind of advice here, or I'm not telling you to take any kind of trades. But yeah, so gold would be a nice trade here, in my opinion. If you're risk to reward, or you have the ability to take this trade, take it here. Stop loss at 173. Actually, you know what? I would even bring it down to 171 because I would think that gold is going to break out nicely over the next coming weeks, and that's what I'm expecting, because I'm expecting a consolidation here. We've had this nice run. A consolidation is very, very likely, or even a breakdown and a retest before it continues to break out of gold. Gold does look very, very attractive here, so that is something that we want to pay attention to. The other thing is the US dollar has been breaking down, right? So that's something that is very, very interesting. And every time it has broken down, a weak US dollar is never a good sign for equities. So, this could be a rotation that a lot of money in the US dollar, as it was strengthening, and they were taking money out of US stocks or the equities and putting it in the dollar, in the currency, just to get a little bit more out of their money for the time being. It could have been a temporary move, and this could be just profit taking as a result. But this is something I want to continue to watch. Every time the US dollar has fallen, we have had not so much of a good result in the market when it comes to equities, right? So a falling dollar is never ever a good sign, right? The other thing is I want to talk about the markets overall, right? So if we look at the sectors, once again, only sectors that are down are utilities and healthcare, and every other sector is up, which is suspicious to me. Like, we got here, this is precious mining and metals, they're up, right? You got semiconductors up with it. Semiconductors also have inverse head and shoulder, right? And you got real estate that's up with it as well. Commodities that have a nice bounce back, right? But we got to be careful. We want to see more of a rotation happening in the market before we decide to commit to any long-term plays. But so far, the market is telling us that it is on the cusp of rebound, and we could see some big moves in the coming weeks, but we have to be patient, let the setup come to us, and then execute on trades. If you guys like what I do, please like and subscribe to the channel. I'll see you guys tomorrow.